Yo, different location now. I'm out here in Houston, doing a little trade recap. Today, real unfortunate. We took a loss, which ends this week with a actual losing week. We made back all of our losses from Monday and Tuesday. We made it back all those losses and some yesterday. Put me up like 4K on the week from yesterday's trades that we won because I made 30K yesterday and then I was down 26K from Monday and Tuesday. And then today we just lost 10 grand on this S&P 500 trade. So we'll get right into it. Or actually it was like 9.7K, but still we'll call it 10K. But anyways, let's get right into it. Daily time frame, bearish. 4-hour time frame, bearish. 1-hour time frame, bearish. So what was I looking for? I was looking for sells. We mapped out this hourly equilibrium, okay, from boom, this high down to this low. All right, and then I also put on this area of liquidity right here, this 5-minute liquidity, and then we have the hourly equilibrium. So I was looking for shorts. We saw that price, boom, wicked up in here, never broke structure, pushed up higher into equilibrium. Then we got a strong reaction. We ended up breaking structure. This looks super sloppy, but we broke structure with this candle right here. I then drew on equilibrium. We pushed up above equilibrium, sold back down below it, and closed below equilibrium. That caused me to enter. As you can see, that was our entry point. I put my stop just right here because I didn't want to put it all the way up here. It kind of fucked the risk reward, and I kind of figured, hey, if we come up here, odds that we get fully stopped out all the way up here are pretty likely. I mean, right now, we're not necessarily at that point yet, but I do think we'll get there just because of how the 15-minute is drawing up. But who knows? It could still go down. Because the overall bias, someone in my Discord said this, and it was 100% true. Our bias was still correct. It was just execution. So, right, hourly, still bearish. 4 hours, still bearish. Daily, still bearish. It was just purely execution. And also, this would suck ass if this thing turned around and hit all take profits just because we didn't put stop loss all the way up there. But, wow, ain't no way. But anyways, that was the reason for entering. We had a, boom, push up into our bearish building blocks, one of our bearish building blocks, swept some liquidity, broke structure to the downside, entered off equilibrium, and then a rejection off of it. Stop was just put right above here. Take profit 1 was these pre-market lows over here, and then take profit 2 was these market lows, and then take profit 3 were these hourly lows way farther over to the left. We can see we got within 1 point of hitting take profit 1, brutal, until we rallied back on up and then ended up pushing higher. This will be so disappointing if this thing just like turns around and hits take profit. But anyways, that's how the game go. We had a great past 2 weeks, and then this week ended the week off down 6K. Oh, because we lost 10K today. So nothing really major that I'm like concerned about, but still a losing week. And honestly, I'm happy with that. If we lose 3 trades and win 2 trades, and you know we're only down 6 grand, which is like half of a trade for me, like half of a losing trade for me, I'm pretty satisfied with that. Especially like, just because like losing weeks, you want to like get everything out, flush it out your system, figure out what you did wrong, so how you can improve. So similar thing with today, where I mean today, like I loved my my bias on this pair. Like daily was bearish, 4 hours bearish, hourly was bearish. It was just purely execution, and maybe even stop loss placement. Like I'm gonna set an alert down here to see if price can actually get down there, because then that'll tell me like, yo, sacrifice some risk to reward if it means, you know, keeping the trade still intact. And that doesn't mean put your stop loss super high the fuck up. It just means like, hey, maybe don't put your stop loss like a little bit closer to, you know, where you think price will go, and instead put it over the actual invalidation point, which is this like liquidity grab, I guess you could say. Because if price comes up here, then that pretty much invalidates that this high was a liquidity sweep. Because if liquidity was actually swept, then price would move to the downside. And that's what it did for a second, but now it's coming on back up. So yeah, that's the trade recap for today. There should be a educational video coming out to you guys on tomorrow, hopefully. So that being said, I appreciate you guys. Much love. I'll catch you guys tomorrow, hopefully, for the educational trading video. Peace.